Short exercise 3-8. It's the end of the accounting period, and we need to record the adjusting entry for depreciation for some computers. So on October 1st, Orlando Gold Exchange paid cash of $57,600 for computers that are expected to remain useful for 3 years. At the end of the 3 years, the value of the computers is expected to be 0. So requirement 1, calculate the amount of depreciation for the month of October using the straight line depreciation method. Now finally, in this new edition of the textbook, they're actually making us calculate it, which is good for learning purposes. So begin by selecting the labels, then enter the amounts and compute the amount of depreciation for the month of October. Abbreviations used, ACC stands for accumulated, and we're going to enter 0 for any 0 balances. So what is the formula in words for straight line depreciation? You need to take the cost of the asset, you subtract the residual value, and then you divide that amount by the useful life in years. And in this case, they want to record monthly depreciation, so then we divide by 12 months. So the cost of the computers is $57,600. Residual value is how much they think they can sell it for at the end of the year, or at the end of its useful life, and that's 0. So put a 0 in there. Useful life, 3 years. Now remember, the residual value is just an estimate. It's a guess, as well as the useful life. So depreciation is not an exact science. It's just an estimate. So let's see here. We're going to take 57,600 divided by 3. 57,600 divided by 3 gives us $19,200 of depreciation per year. And then they want us to calculate it per month. So we divide by 12. And that gives us $1,600 of depreciation per month. Record the adjusting entry for depreciation. So now remember, depreciation is an expense, and expenses are increasing as they almost always are. So how does an expense increase? With a debit. So the debit account is going to be depreciation expense. And then we need a credit account. Now here's what a lot of students try to do. Let's see if they put the computers. A lot of students try to lower the computer equipment, the asset, directly, but you're not allowed to do that. So here's a screenshot from our lecture. Notice when we're doing the truck, I put a big X here to tell you that we cannot lower the truck value directly, because we need to keep this cost of the asset, truck in this case, computer in this exercises case, we need to keep the original cost there and not lower it at all, because we need to know the historical cost of the asset. So instead of lowering the truck account, we're going to put that, in this case, $1,600 in the accumulated depreciation account for that computer equipment. And what type of an account is accumulated depreciation? It's a contra asset. Here's our expanded accounting equation, and I've now put the contra assets below assets because contra assets offset, or they're a lot opposite of assets. And notice the plus sign is on opposite sides. So as accumulated depreciation gets bigger and bigger, it needs to get bigger and bigger on the right side, which is why I'm crediting this. And then we need an explanation to record depreciation on computer equipment. Then they want us to post the purchase on October 1 and then the depreciation, and then show the balances as of the end of October 31. Now they don't have cash in here, so we're going to ignore cash, but on October 1 they paid cash of $57,600 for the computer equipment. $57,600 October 1. And in the real world, you'd also have a T account for cash. You would lower that, but that's not the emphasis of this problem, so we're going to skip it. And then we're going to post these entries. So we got depreciation expense increasing on the debit side. Depreciation expense, October 31. And then we've got accumulated depreciation, 1,600 on the credit side on October 31. Notice how they put the computer equipment account right next to its contra asset account. In other words, accumulated depreciation. So these two accounts will be side by side in lots of different places. In the chart of accounts, on the balance sheet, and on the trial balance. And then we need to calculate the balances. Well, this is easy. Balance of computer equipment, 57,600. Accumulated depreciation, 1,600. Oops. 1,600 for depreciation expense, balance. And now they're going to want us to calculate the book value. Calculate the equipment's book value. So do you remember what the formula is for book value? It's the cost of the equipment minus the accumulated depreciation. So cost of the equipment is 57,600 less this 1,600, which is accumulated depreciation. It's not depreciation expense, it's accumulated depreciation. So then we do the math. 57,600 minus 1,600 gives us a book value of 56,000. So what does this book value mean? Does this mean we could sell the computers for exactly 56,000? No, that's not the purpose of depreciation. The purpose of this depreciation and the accumulated depreciation is to show that over time our computers are losing value. Now, for computers, they don't really wear out so much as they just get obsolete. Obsolete means eventually there will be a new type of computer that will be faster and will be more capable. So eventually these computers, and probably in 3 years, according to this company, they're probably going to have to get new computers and get rid of the old ones. So this $1,600 of accumulated depreciation is just trying to estimate how much the value of the computers has been going down. So they were worth 57,600. They've dropped this much approximately in 1 year. Actually, this is 1 month. And then they're worth $56,000 approximately on our books. Remember, book value just means the value on our accounting records. So on our balance sheet, we would show that the value of our computers are $56,000. And then another reason for recording depreciation, we can take the expense, depreciation expense, and this on our income statement, this will lower our profit so that it will save us some money in taxes. And that's it.